So the best strategy which will be suitable for the budget day, that will be our agenda of discussion today. And why this budget day is so critical for us or as a trader. So what do you expect on the budget day? A wide swing in the price as and when the news flow comes to into the market. You may experience a very wide swing in the price parameter. Certain announcements will be taken positively by the market, certain announcements will be taken negatively by the market. Overall, you will get one price will move in a great band. It may not be sustainable band. Maybe that band will not sustain for a long time. It is just like a flash crash like situation you will find out. This is respect to the price. So, and that action will be so short that as a trader, sometime you may get an opportunity to trade, sometime you may not get opportunity to trade. Even though if you enter a trade, the time you decide to book the profit, maybe the situation will be out of your hand, you may not be in a position to book the profit also. Same way, the time you decide to book loss and come out, that situation also may not stand with you and you may start losing on that trade. So that is the wide swing in the price. Which is more important for me here, the immediate fall in volatility post event. So once this budget is over, say by noon or towards the end of the market hour, you will find out the immediate fall in the volatility. So immediate fall in the volatility will contribute to the immediate fall in the implied volatility also, and implied volatility will decay faster. If it is market neutral, you may find out that price, end of day price will not be much different as compared to the previous day close. However, the IV of all these options are going to decay very fast. So at this particular junction, or to know this kind of situation is going to come into the market, how we will counter this? How we will counter this and how we will form option strategy to benefit from this kind of actions. So here I will once again tell you, while forming option strategy for the budget day, 3 areas of your criticality you have to give the focus. One, you have to choose a correct strike. Which strike option I should choose to form a strategy? And you need to design a strategy to benefit from volatility. And you must, this strategy must take care of the IV decay, which may happen post event. So that also it should take care. So these 3 areas is very important for you. And to identify a correct strike, you need a correct trend identification method. So many good trend identification methods you will find out. I will be advocating on the 1 standard deviation trend identification method. And IV decay is a must. You need to understand these things very carefully. The implied volatility of all these options are going to fall definitely post event. So since the IV is going to fall, so the premiums of those options, whether it is this month's option or the next month's option, are going to be get impacted heavily post this budget scenario. So if you are a sole buyer of any option, fortunately, if the price moves in a wide range and move as per your anticipation, you may get some profit. but that is lock and fortune factor plays there. If you are buyer of a option, same time if you seller of a option and misfortunately or unfortunately if the price move against your viewpoint, then also you will be a loser. So buying a single option or selling a single option for budget day is not a good idea of trading. However, you may do that. The success on that particular trade purely depend upon your luck and fortune. It is not depend upon your plannings. So how to benefit? You need to form option strategy. So once you are going to form option strategy, what is the basic theme of your strategy? Whether it will be a delta neutral or vega neutral or theta neutral. What will be the theme of your strategy? That also need to be discussed. If you are forming a delta neutral strategy at this particular juncture, I'll advise you to form net delta zero strategy. Net delta zero strategy. So net delta factor must be near to zero. So this particular strategy is going to give you profit in case of a wide swing and immediate fall in the volatility happens. So what is the simplest net delta strategy, net delta zero strategy, simplest net delta strategy? So if you buy one buy an future, suppose if you buy one future one lot, so that future will be having a delta of +1. Future always has a delta +1 if you are buying. If you are selling a future, then delta is -1. So I'm just telling you the simplest delta neutral strategy or delta zero strategy. If you buy a future, then your net delta is +1. So you need to find out an option, and definitely this option should be a put option. And that put option should have a delta near to -1. So the idea will be, if you are buying a future, buy a put option deep in the money. So deep in the money, options, deep in the money options if you buy, then that options will be having a delta of near to -1 and your future having 1 and you will arrive at 0. So this will be the simplest delta zero strategy. Out of that, many other strategies are there which is also classified as the delta zero strategies. So few things I'll be outlining here. So what are the other strategies which can give you the net delta zero? So when I talk about net delta zero, you must not stick to your arithmetics and say that yes, I have to calculate delta and derive in such a way that it should come to 0. So getting an absolute 0 in delta value is quite impossible. However, if you are getting a close near to 0, then it is also acceptable as a trader. So these are the strategies which is always maintain a net delta 0, cross calendar bull and bear spread. So this also need to be found as per your trend breakout. I'll explain one by one. Ratio call spread or put spread based on the trend also. Net debit calendar spreads. This is also considered as a net delta zero strategies. And any combination of these three. If you are forming a cross calendar with ratio or cross calendar with net debit calendar spread, so these two also it is acceptable. So here, once you form these strategies, you have two projections here. One is the theoretical profit projection and the real profit projection. Theoretical profit projections you can do by calculating yourself in a paper. However, real profit projection can be done with the help of a software. Without the help of a software, it is difficult to project the real profit projection. Few days back also I have emailed you one strategy. So first let me go to that strategy what I have emailed you. So just 2 days back on 27th or 26th I have just emailed you one strategy on Bank Nifty. Bank Nifty, the strategy I have recommend 19,500 put option of February 23rd February. So 23rd February expiry, 23rd Feb 2017 expiry. So this particular expiry, I have recommended you to buy 19,500 put option at 285 two lots. And same time I have just told you to sell 19,000 put option of same expiry at 148 rupees range, two lots. Along with that, I have also told you to buy 21,000 call of same expiry, 23rd February expiry, one lot at 140 range, and simultaneously I told you to sell 21,500 call option, one lot at 56. So this is buy, and this is sell, and here too also two lots, this is buy and this is sell. So here looking at this aspect of theoretical profit projection and real profit projection. So what is the theoretical profit projection? Whenever we are going, so 285 we are buying this one, we are selling 148 one lot. So 137 rupees of risk we are taking. So two lot size is approximately two lots is 80. So 10,960 rupees will lose if the Bank Nifty move above 19,500 and maintain above 19,500 and expires at 19,500 above. Simultaneously, I'll be telling this call option 140 range we are buying and 156 range we are selling. So this is one lot. So I can say 84 into 40. So this is the 3,360. So this particular strategy says theoretically this particular strategy says if the Bank Nifty, very carefully listen to this fact, if the Bank Nifty oscillates and expires between 19,500 to 21,500 by 23rd February, between this particular range 19,500 to 21,000, in this particular range if Bank Nifty oscillates and expires by 23rd February, my net loss will be 14,320. Imagine two extreme cases. If the same Bank Nifty closes below 19,000 by 23rd February, then my profit will be in this particular things will be 500 into 80 minus 10,900. So 29,000 gain I will get here, and this 3,360 will be a loss definitely. So if it is closing below 19,000 by 23rd February, my profit will be 25,680. Imagine the other case. If by 23rd February this Bank Nifty closes above 21,500, then my profitability will be 500 point I have taken into 40 one lot. So subtract from 3,360 here, and here this 10,000 will be a absolute loss. So net I can gain 5,006. So three extreme cases scenario I have shown you here. Theoretical profit. This is nothing to do with the software. The case one, we are getting if the price doesn't move above 19,500 or above 21,500, or you can say if Bank Nifty expires between 19,500 to 21,500 by 23rd February, then you are going to lose 14,360. If Bank Nifty fall below 19,000 by 23rd February, your gain is 25,000. If it is moving above 21,500 and expires above that, your gain is 5,680. So all these three cases are the theoretical cases. Nothing is with respect to trend is being calculated here. So we have not considered the trend parameter during this phase of time. During this phase of time, how the trend will span out or how the trend will move, we are not talking about that. So trend parameter we are not considering, just theoretical estimation. But when you use a software, your things is different. So suppose if you are using a software, this budget is an event which is going to end tomorrow, and I'm just going to hold it post budget because this scenario will change by post budget. So if I am just going for the strategy, I'm just buying a put option, same strategy I am forming, 19,500 buying 2 lot, and I am same put option 19,000, I am selling 2 lot, and I am buying call option, say it was 20,500, and I am buying 1 lot, and I am selling call option 21,000, and that too 1 lot. So I'm just going to hold it for only 3 days because budget is going to get over in 1 day. So here once I do this and I just calculate, my entire projection will be different. Entire projection will be different. So within these 3 days, if the price oscillates between 19,700 to 19,474, I'll be having these respective losses. If the price goes to within this 3 days period, if it is going to 20,000 plus, this is my losses. And during this phase of time, if my price fallen down to 19,000 level also, I have profitability only 5,000. So theoretical assumption and practical profit assumptions are entirely different. This I wish to convey you. Most of the traders, what you used to do, theoretically you calculate something and you just conclude that yes, this is the risk reward is this much, we are not going to get this one and we are going to get this one. All these things we used to calculate without assessing your period of holding. When you assess the period of holding, your profitability projection also changes. So neither you got this projected profit in 3 days period of time, nor you got this projected loss in the 3 days time. So this is what, if it is says, then here the point I wish to make it, that trend is important. Very important is trend. So if I just look into this particular trend for this week, we are expecting 20,500 or 19,063. So if I just look into the same strategy in this particular price points, if I look into this strategy, so this strategy, how the strategy will be at 20,500 and 19,063. So 19,063. So if the price goes to 19,063, What will be the profitability? 4,800. If it is going to 20,500, what will be the profitability or loss liability? So it is 3,361. So this is as per the trend in this coming 3 days period. If the price goes to 20,500 plus, my liability will be 3,000. If it is going to 19,063 level, then my profitability will be 4,840. So this much I am going to get in this particular trade. So this is what this is what the strategy analysis as per a real-time estimate conveys us, and as per a real-time estimate, this is what we can get from a strategy. So it is good that if you have a software, you can real-timely estimate these particular strategies. So this is with respect to the strategy what I have emailed you. Now look into this part of these three strategies what I am recommending for the budget day. One is cross calendar bull and bear spread as per the trend breakout. So what is the trend breakout points? For Nifty, I'll just give for the Nifty, Bank Nifty, you can look into of your own. So 8637 below the downtrend, 8706 above the uptrend. And here the trend confirmation point I am taking 8724 and 8615. So currently if I look into the price part of Nifty, I'll be around 0.382. So 37 to 15 this range I am trading. So downtrend breakout has given. So I am going to form a option strategy, cross calendar bull or bear spread. Why I am forming this one? Because this is a net delta zero strategy. This is going to protect me in case of a implied volatility decay happens post the budget event. So this is very important. For that only these three strategies I am forming. Cross calendar bull or bear spread I have to form. So here since the downtrend breakout is given, I will be forming the cross calendar bear spread. So cross calendar bear spread whenever I am forming, I need to look into which factor? I need to look into the factor of our delta. So delta I have to derive to 0. So I am just going for Nifty. So 8,000 Greek scanner. So here I have just taken a Greek scanner. So 8,600 put, that range I have to go. 8,600 put having a delta of 0.408. Whatever may be the premium, delta is 0.408 negative, and that too per put. So I am just going for, because nearest strike is 8,600. That's why I am choosing the correct strike is 8,600 put cross calendar bear spread I am going to form. Cross calendar bear spread means February I will be buying, March I will be selling. Put at a 133 rupees of premium minus 0.40 and 0.408. 0.408 is the price. 0.408. This is the delta of 8,600 put of February series. And now I need to look into the March series. So March series also I want. So I'll be just going to the software and I'll be just March. I'll go the data here. So and Greek scanner, call options, put options. I have to see the put options which will be having net delta 0, absolutely 0 I won't get. However, near to 0 I can get it. So here if I am going for, because bear spread I am going to form. So here is 28 and 23 and 18. So better if I am just choosing here you can say 8,400, March 8,400, put option, I'm selling, so this is for buying, this is I bought. And before that also, let me have a look into the trend. If 600, I am just selling this bank nifty. Why I have chosen 8,400? Why not 8,300? Why not 8,200? So here, if the downtrend gives a breakout at 8,616, I have the probability to touch 8,435. So I'm just taking a strike near to that or lower than that the next month, which is 8,400 strike is coming as per this trend report. So I'm just going for 8,400 strike for that reason. And once I go to that 8,400 strike, so 8,400 strike, the net delta is 0.2316. So 0.2316, it will become positive 0.2316. So this is sell, and in fact this premiums also I'll get it. So 8,400 premium is 103 rupees the premium. So 103. So I paid 133, receive 103. So how much my net I have paid to the market? 30 rupees. So this is the maximum loss theoretically I can have. So 75 is the lot size. And if I get the theoretical profit, so 200 points into 75 minus this one. So this is my theoretical profit and theoretical losses. So theoretical losses is 2250. Theoretical profit is 12,750. But don't get thrilled by looking into this theoretical profit and loss. So what is the actual profit and loss I can get in this particular? So for that, I need to again, for getting this actual profitability and liability, you need to take the help of the software. So this actual things you will get only through a software. Manually you cannot calculate. So I just go for the Nifty February. So this is what our software is. So the data are got loaded, and we are taking the put option 8,600 of this particular month. IV is this, and one lot I am taking, and here I am put option of month March. Month March is displaying here, and a strike of 8,400. I'm selling one lot, 103 point something, 17.22 IV. Since the budget is there, it is having a little higher IV. So one lot, and I am going to hold for 3 days and calculate this. So this particular thing says if I am going for that 8,434 range, my profitability I can get it at 2313. When my trend is going to change 8,706, if you look into the trend report, 8,706 level my trend is going to change. So this is coinciding with my level of T3. So here my approximate loss is 1463 I can get because of IV decay and other factors. And if it is going to 8,440 level, the last target I can get 2313. So neither the theoretical profit will be my actual profit I can encash, not the theoretical loss what I have calculated is going to trigger for. So this is the actual things you can get as per this particular as per this particular software. So this is the actual result you can get as per this particular software. So theoretical and the actual profitability projections, these two different factors. So here you got some 1450 and you got some 2340. So it is worth to take this particular strategy. Reason is you have only 30 rupees of exposure, and once the IV decay happens, IV decay will happen in both the cases. in February and March together. And this profit also has a great meaning. The reason is this kind of strategy takes very less margin, hardly some, I think 24, 25,000. You can initiate this kind of cross calendar strategy. So cross calendar put we have taken and we got this. So next, ratio call spread or put spread. Whenever we are going for ratio call spread or put spread, so that too also as per the trend we have to go. So here the ratio call spread and put spread says that ratio call spread and put spread, if I look into this trend parameter, I'll be buying 8,400, 8,600 put option one lot, and same time I'll be selling 8,400 put option two lots in the same series. So this is called your ratio put spread based on the trend breakout, because trend breakout has given. So if I look into this particular parameter and form a ratio put spread or call spread, so what will be, theoretically you cannot able to estimate that. However, we can do some real-time estimate here. So ratio call spread or put spread, next strategy. So how we can go about that? So ratio call put spread we are forming. Put option 8,600. I am buying one lot and I am put option 8,400 put option I am selling two lots. Why I have done it? Because 8,400 is the last target I may achieve as per this trend estimation, and I have given this breakout. So for that reason only I am just forming this entry and I am just calculating this one. So if in case it falls below 8,400, I'll be having a loss of 1,300 rupees. However, if I'll be oscillating in a range manner, say 706, 8,706 to 8,000. So if I post event, if I am just oscillating in this particular band, say this is 762 to 581, first target band, if I am just oscillating post budget event, then my profitability will be some 900 to some 1,000 rupees range. I can, but it takes a greater amount of margin also. So this is also, we can say, ratio call spread or put spread. Moving into the next one. So net debit calendar spread. Net debit calendar spread, whenever I am talking about those spreads wherein you pay some money. So net debit calendar spread, whenever you are forming, you have to buy March and sell Feb, each one lot. And this, whenever you are forming net debit calendar spread, you have to form in the trend termination points. So what is your trend termination points here? So here is 8,400 and here it is 8,900. So currently you are at 8,600. Currently it's 8,600. Trend termination is 8,400 and 8,900. So little if you can go above, you can say that I'm 1.236 level if I'm making it. That too also 850 and 500 it is coming. So if I'm going to form such a strategy, net calendar spread strategy, so my strategies will be in this order. So I'll be buying 8,500 put March and selling 8,500 put Feb. It will be a good idea if you can, along with this, if you can just buy 8,850 call March and sell 8,850 call Feb. If 850 is not available, you can think of 800 also. So it will be a good idea if you can form this kind of things. What happens here, February, the very idea is the February is going to give a greater decay post the budget event, where our March you will have ample time, which may not give a greater decay, and that will lead to your profit. So IV decay will be leading to a higher profit in case of a decay. So this is what you are going to earn in case of a budget price move during the budget day, if there is the price move happen in a very wild way. So all in all, these three strategies are good for the budget. One of the best strategy also, I'll tell you, if you want to little bit swing more, if you just want to little bit swing more, if you want that, no, I need to speculate a bit. So there, I'll just tell you to do a strategy. Suppose now the downtrend, you have to look into the trend. Trend is very important. First part is trend. First, you have to form a delta 0 in future and option. So future and 0 in means you have to buy a future with a put option. Definitely it will be in the money put options, and this will be net to 0. Then you need to add two more put in the trend termination to make it delta negative. So this is one of the combo you can form, which is having a great profitability also. I'll show you this particular strategy also, which I have formed. So I have formed this particular strategy, and this particular strategy, whenever you form, you get some good opportunity to speculate. So what happened here, I have just gone with a deep in the money option, 8,900 put, along with the future buy. So along with the future buy, I have gone with. So this has resulted the net delta to 0 because it has very limited amount of time value. And I have added 8,400 put option 2 lots to add some more delta, negative delta, anticipating a down move in the first or second target. So this is net delta negative strategy. Net delta negative strategy. However, this strategy has an objective for you to take benefit of the wide swing. Imagine a case if on the budget day, definitely there is a wide swing is going to happen on the, either in the upside or downside. If upside swings happen, I'm helpless. I have to book it and book some losses and come out because negative delta. If there is a downward swing happens, because downside breakout has given, that's why I entered. In as per the trend, downside breakout has given, I have entered. And other factors also suggested me to enter this strategy. Not only this downside breakout, but also the put call ratio. PCR also I have seen. Put call ratio also I have seen that it has fallen below 1. So though it is not below 0.85, but still below 1. So all these things suggested me to enter this strategy. So if the Nifty goes little down, say to 8,440 level, I will be these two lots of put option what I have bought it, I'll close these things. I'll just close these things because my oscillation point, this is very good strategy. All other strategy what I have shown you, this is just if you want to hold, it has a lesser risk and lesser reward. However, this is a speculative strategy. This particular strategy, when you initiate, you have to look into the trend. Trend has given me the downside breakout. I have entered. Once it comes to 8,490 or 434 range, so say 0.888 or 1.236, the 8,400 put what I have bought, I will be booking the profit in that and coming out. Still I have a future and a deep in the money options long. And once I book a profit and come out, I'll be waiting for this particular trend to bounce back to a region of 0.382 level or zero point 0.5 level. Again, I will re-enter. I will re-enter, and these speculations I'll be going on doing on 8,400 put option till this price oscillates between 8,706 to 8,490. If on the budget day only one trade I'll be speculative, then you must say that why for that particular 8,000 future is being taken and deep in the money options is being taken. In case there is a bounce back and it is coming back, means it is coming to the top, and say it is coming to the uptrend of 8,800 or 8,853, what will happen? My deep in the money option will add on some time value, say 100 rupees or 110 rupees of time value. I have taken with a time value of 20 deep in the money, and once it is this trend changes and move up, it will add on some time value because it will surrender the intrinsic value and add on the time value. That time value factor what will add on to this 8,900 put, 8,900 put. So that time value is going to compensate near about 70 to 80% of the time value what I have paid for 8,400 put option. So all in all, I have a very lesser losses I can incur. Same time, it also gives me one opportunity to speculate. So this also one strategy you can think of initiating. Trend breakout is being given. Trend breakout is being given. So I am just forming a strategy with net delta negative. So in the most simplified way, I am buying a put option near to 8,434, two lots. I am buying the future, though it is a downtrend breakout, anticipating a trend reversal. I am buying the future along with a deep in the money of put option by paying a lesser time value. So if the trend change happens, then the deep in the money put option will add some time value which will compensate the losses I may incur at the trend termination put options point, that is 8,400 points. If trend change doesn't happen and it goes down, then I will be speculating on 8,400 put option at least one or two times to get good profit from this particular event. So this is also a good strategy for the traders. Any questions in this regard you can ask. You can see it is a negative delta, that delta is negative, and this is a speculative strategy for the budget day where I'm just taking a future buy with a deep in the money options, put option buy to make it net delta 0 and adding some more negative delta to by the way of adding 8,400 put, because this 8,400 is the termination, trade termination for the week. For that reason only I am just making. So this, by this way, we have formed it. If why I am initiating this trade, what is the benefit of having this trade? That's why I have told you what is the difficulties of a budget day or any of your day, monetary policy day and other things. You expect a wide swing. That swing will not stay longer, and you expect a fall in the volatility post this event is over. So these two things you have to take care of very carefully. So for that, you have to take care of how you form a strategy to counter this falling volatility. how you form a strategy to take benefit of this wide swing. So this too will be your objective. You set an objective, based on that objective you form a strategy, you implement that, and whatever the profit or loss has come, you have accepted it. So this is called a rational way of trading. This is nothing to do with throwing a stone in wild to hit a unknown target. Repeat what are the things we have. So we are an organization totally dedicated towards the traders education, and we always innovate the new techniques of trading. The one standard deviation techniques, Gann angle and volatility technique. All these techniques are our own technique. So whatever the option strategy software you are seeing, that too also is a unique software wherein we take the many parameters that IV will decay, IV will increase. So many trend parameter into account and give the things. It is not just like a graph or chart and say that many graphical option strategy software, they are just giving you a theoretical profit which may not come. As I shown you, theoretical profit and theoretical loss will never come in your portfolio. Only a part of profit or part of loss will come based on your objective of holding or time period of holding. So all these techniques of ours, we never hide it, and we have always been encouraged by the traders that whatever the techniques we have used to develop our softwares, develop our stocks, whatever the techniques we have innovated, everything I have just put it in our courses and books. So one standard deviation technique also is one of our 34 intraday trading technique. So all these courses available with the new approach of trading. Technical courses once you go through, you may be knowing that just head and shoulder pattern. But how many candles one should take for head and shoulder pattern? When that pattern will be considered as a failure? What is the mathematical validation behind it? So all these things, fine-tuned things you can learn in our course. You will not learn that yes, the chart is looking like a hill-like of structure, it is head and shoulder, and no fancy talks there. It is pure mathematically, we have derived those things, given the examples, proven those things, and we have put it in our course. So whatever things we have so far proven, those things you will find it in our courses. So all these courses based on your objective of investment, your interest towards learning the principle of market, so everything is given in this. So, and this particular software what I have demonstrated today, this is option strategy software, real-time option strategy software. So wherein you can see all those strategies, formations and other things. So if you wish to, it means and if you are convinced with this idea that yes, I need to educate myself before I should start venturing or make this trading as my profession. So then it is a must that you must learn the stocks. You must educate yourself. Just by looking at a television channel, buying someone's tips and advice is not going to solve your goal towards becoming a professional trader. To be a professional trader, you need to educate yourself. It is a definite fact. Without educating yourself, just looking at television channel, just nurturing a greed that I need a beautiful tip which can give me some five-fold return in a month, such kind of things is not going to solve your purpose. And keep it in writing, 1 in 10 traders used to win the trade. 1 in 10 traders. And that one trader who wins the trade is properly a educated trader. The trader who spent his money not for tips rather than the trader who spent his money for his education. And all these stops, whatever you are getting, 6 printed books, 16 DVDs, all our softwares. This is things. If you want to buy any particular course, it has a individual price tag. However, if you are going to buy entire things at a together, it is having 17,500. We too have an extensive support structure for this. If you want that, yes, I will take this course and someone should train me for one period of time, we have this entire course along with 1 year's extensive training. Every month you will have some opportunity to discuss with us about the trading and other things. So that cost you 22,500. So you pay 6,000 extra. However, 12 months we educate you. We convey you the method of trading. We discuss with you the methods of your trading or whatever your difficulties and other things you discuss with us, get it clarified. So that facility also we have. So we are an organization totally dedicated for this. If you think our method of smart type means say standard deviation, GAV or option principle works in real market, because everything depend upon your trend calculation. If your trend calculation is correct, then most of your methods will come true. So if you are convinced with this idea, yes, they did a work and it works. They gave me a trend report on 27th January, it works. So I need to learn it. I need to master it. If you have that kind of interest, then better enroll for the program, better take up a course, educate yourself, then you will think a great change in your trade. So it is a fact that many traders has experience. Many of you already possessing our courses. Many of you are already the means owner of our software. You own this software, use it extensively. You discuss with us. You will find out how it has changed your trading life. What was your trading before you take up our courses and software? How was your trading? And after you take up your courses and this thing, how was your trading? So these two things is a great difference. So if you follow that, yes, I am means I just wish to initiate means a successful trader in the market, you do not require successful tips, you do not require costly softwares, you do not require anyone who can just give you a idea of multiplying your money to 5 or 10 folds with no time. So such kind of things never existed in the market. If you if you are a follower of those concepts, give me a tip which will give me 500% return. Give me one software which will never fail. So I will just give it in writing that such kind of trader will never exist in the market more than one year. Within 1 year, they will wipe out all your capitals and they will go away. Trader who are convinced with that, yes, I need a disciplined planning. I should plan my trade and that trade should give me success. I should know how much I am going to lose in this trade if it is going to fail, how much I am going to win in this trade if it is going to be successful. Such kind of traders are going to be successful in the market. Many of you are getting my report from the past 67 weeks. In this particular report also, what I have written, none of my recommendation I have given wherein I said that trend breakout is being given, buy it, you will definitely get a target. I always mentioned on Monday or any time, just read through this sentence is not being changed from past 67 weeks. If this price has say crossed, buy it along with a hedging of 8650 put option. Future you are going to take 6.5 lakhs risk. So I do not want my traders to take a 6.5 lakhs risk without having a hedging parameter. All my reports I mentioned that you should hedge. And yes, it works. Sometimes it works. You can say that yes, now you can say it is coming to many of you. Many of you are telling that yes, trend breakout has been given, and I got the first target or second target. Then why should I hedge? So that hedging has made me hedging has made me to lose some money. It is not the fact that you lost the money. You have protected your portfolio. That is very important. So this is the very theme of your success. The moment you decide that yes, I need to protect my portfolio through the extensive hedging process. No doubt profit will be lesser, but profit will be consistent. Profit will be definite. Profit will be objective. And it is going to grow month on month basis, year on year basis. The day you decide that no, increase the exposure, I want only profit, let there be a risk, you are going to finish off with more time. So this is the fact of the market. whether you accept it today or tomorrow. This is the so keep hedging, follow the principle which proves in front of you, which gives success in front of your eyes. Follow a principle which you can able to calculate yourself. You must ask that what is this principle used? And many of you ask that what is the percentage of success? Ask what is the principle you have used. Then the things will be different. Trade, you will start enjoying the trade and you will become a professional trader. That should be the object.